it was following the dollar pretty closely up until Liberation Day. And you see the dollar falls and term premium spikes. And I think that this was, again, you had some foreigners, a bunch of people, maybe some central banks, right? Japan, unloading some treasuries. And therefore, widening term premium because you're baking in the idea that U.S. debt is no longer as desirable in an environment where U.S. exceptionalism isn't as dominant. And I think that trade might have bottomed over the last 2 weeks. That doesn't necessarily mean the market bottoms, but I have a feeling like there's the possibility that things like the Europe to SPY ratio, right? When you're comparing like European equities to SPY to American equities, maybe this has somewhat of a topping look. I think at this point, after coming aggressively off the lows, you could do China as well. This it looks like it topped a bit earlier. Also, not really up near highs. So I think that if we start to see these relative offsets come back into balance between foreign equities and American equities, dollar should rally. And if the dollar rallies, I think things like gold probably don't do as well, right? Gold seems to have almost peaked when the dollar bottomed. So dollar reversing is not going to be good for gold, and it might actually be better for bonds longer term if the dollar can revalue higher and therefore bring some confidence back behind the greenback, therefore killing some term premium. I think that's probably what needs to happen for bonds to shape up.